Let's stick with this story. Check out the pop in shares of HubSpot, Salesforce, Figma, Coursera, all mentioned on stage at OpenAI's Dev Day as partners. So, what does all that mean for investors when one private company has so much sway over public stocks? Joining me now is Alex Kantrowitz, big technology founder and CNBC contributor. Alex, very seldom is so much of the demand in a global innovation push focused through one company in OpenAI.
Right. There's definitely a concentration risk here with OpenAI, and also a risk because so much of the stock market, so many of the companies that you just named are betting not on today's technology, but on tomorrow's technology, the technology that OpenAI keeps promising will get better and better and will deliver innovations we can't even think of today. And I think there is a real risk, given that that is the single point of failure, if it's unable to deliver those amazing results that Sam Altman seems to promise every other day, that there could be a cascading effect here where lots of companies could end up getting hurt.
There certainly is that risk, and we've talked about it here on Overtime, similar to the internet when we went through that trough of disillusionment where Amazon stock was trading way down and we had all that dark fiber from the telcos that Google ended up picking up. But I guess on the flip side of that, there's the idea that all the time when there's a huge shift, there's a risk about how long it takes for the benefit to get delivered. How does an investor, you think, calculate how much exposure they have to that trough of disillusionment opening up at any given moment?
Right. So this is what makes this moment so interesting and unique and tough to play as an investor. You already see, unlike maybe some of the early days in the dot-com era, you already see results from OpenAI. So you're really just doing a valuation game here, because the question is, how much is the market pricing in what's coming next, as I mentioned? I think this is the problem that I see in the market today. The market is priced as if you continue to scale data centers, you're going to get technology, AI technology, that's not just incrementally better, but exponentially better than what you have today. I mean, you look at what Sam Altman is writing in his blog, saying if we just had X amount of compute, we might be able to cure cancer. And that would give me pause as an investor, because ultimately that ideology is not really synced up with what we see in AI research today. If you speak with most AI researchers today, they would say that making the large language models that underlie the GPT models and the ChatGPT application, making them bigger isn't making them that much better. So right. If you're an investor, you just have to play with these ideas of I'm seeing something real today, but the valuations based off the expectations are probably out of whack.
I love a good debate, though, so I'm going to continue to take the other side. Right now, we're seeing a technology environment driven in part by the cloud, where unlike in previous eras, say the dot-com era, you've got these mega cap tech companies that are actually like utilities for compute and by extension for AI. And if this gamble works and AI does deliver at least most of what's promised, a lot of the benefit could accrue to these larger players, including not just NVIDIA, but Microsoft, Google, Amazon, Oracle, et cetera, and perhaps on down to OpenAI itself.
Oh, look, I'm totally with you. If we end up seeing most of what's promised, we're going to have an unbelievable future because a lot has been promised. But I was speaking with Thomas Kurian, the CEO of Google Cloud, earlier today, and I asked him about these investments. And I think he said something really important to me. He said, if you're generating wealth, then you're going to be in good shape. But if you're just moving money around, then we know how that ends. I think ultimately what this comes down to, and you're right to highlight it, is the bottom line. If these companies are able to generate a return on investment for businesses, which to date has been somewhat elusive, if they're able to run their chatbots profitably, which to date has been elusive, then they're going to make a whole heap of money, and we're going to see a lot of this pay off. And this is, again, it goes to the problem. It's an if, and there are a lot of ifs right now. And so nobody who uses this technology says it's a zero, but a lot of us are asking, what is the right number? And I think that's a very appropriate question to be asking.